This roller coaster ride on Wall Street probably has you concerned about your retirement. 401k investors pulled $23.5 billion out of mutual funds with U.S. stocks in just the first 10 days of August. It's the biggest outflow since October of 2008.
But before you make any big decisions about your retirement money, listen to financial advisor Ray Martin of CBS MoneyWatch, who joins us right now. Ray, good to see you. It's good to see you smiling. I think the people at home
it's reassuring.
will look upon that very favorably.
It's great to see both of you. The show's looking good, so are you.
Let's talk a little. The market's not looking good, and that's our topic here this morning. People are scared, obviously. Should they be scared, continue to be scared, and should they be pulling all this money out, their 401ks out of the market like we're seeing?
Folks should be concerned, okay, in these times right now. How many 500-point swings in the market can you take these days? And I can't fault people for pulling their money out right now. And the numbers are actually getting worse. More people cashing out here. But what I am saying to folks is this is not the financial crisis of 2008, 2009 all over again, where we saw a 40% drop in the markets, okay? We're down about 15 to 17% here from the highs of April and down about 5 to 7% for the year. But I don't think it's the same right now.
Okay, so you're tempering it a little bit. It doesn't feel that way to a lot of people, though. So people who do want to pull their money out, what should they be doing?
Okay, right. But we don't see General Motors failing, AIG failing, Citibank failing, and the government taking it over. Folks should be thinking about this right now. If you're close to retirement and you're on the sidelines right now, I'm okay with that for a while, for 4 to 6 weeks here. Let things settle out. But there are some moves investors in 401ks and other investors should be making. We should talk about that.
Okay, so we've got, I think you have a list of 5 different things that we should be doing. The first one you say you should look at is look carefully at bond funds. Beware of bond funds.
Bonds right now are priced at historically high prices and historically low yields. You're set up to lose money over the next 10 years. If you're in a long-term bond fund in your 401k plan, get out of it. Look to a short-term bond fund or a stable value fund.
Next, you say cash is trash. Why?
Absolutely. Cash, money market option in 401ks are paying 0, in some cases negative interest rates. In other words, you're losing money. Versus inflation, you're going to lose 3 to 4% a year. You're going to lose purchasing power, guaranteed. You can be there for a few weeks, maybe a few months, but not longer than that.
Okay, no long-term bond funds, no cash. You say invest in stocks, though, for total return. Translate that into layman's terms for us.
In a 401k plan, many 401k plans offer a large company stock fund. It's a fund that invests in stocks like General Electric, IBM, AT&T. They pay dividends, a dividend income of 3% or so, and they could grow another 3 to 4 to 5%. You're setting up for a 6 to 8% total return over the next 10 years. A lot better than the other options I mentioned. And stocks right now with the pullback are a good relative value.
Also, invest in growing emerging markets. What countries are you thinking of? Because I think a lot of people are looking at a lot of the European countries.
Europe and you think
they're not doing very well either.
I'm not talking about
going to Italy.
I'm not talking about Europe. That is for sure. Okay. What we're talking about is an emerging market stock fund that invests in countries like stocks in China, Brazil, Australia. Those economies are growing. Their governments have surpluses, not deficits. They have cash, not debt. Structurally so different, and they're set up to grow much stronger than we're seeing now.
Okay, what about gold?
You got to own it. Right now, gold is a good store of value in times of uncertainty, and when the pressure is on the U.S. dollar, own 2 to 5% of your portfolio in gold. And if you can't do it in your 401k, do it outside.
But now that it's over $1,800, is it almost? I think people are saying, it's too late. I mean, where is the ceiling?
No, it's not. I think we're just getting started. A lot of analysts on the
same
side do believe so. And that's not just about uncertainty. It's also about the U.S. dollar losing its stature in the global economy. And that is what it is. Get on the right side of the trade here. We'll be around, hopefully, to tell people what to do with all of this in the coming weeks and give people some heads up.
Great, thanks.
Thank you very much.
All right.